All right. Good morning, good evening, everyone. I hope all of you guys are okay. And happy to come into another um week. Well, for me, last week has been fruitful. Um, I'm not quite sure whether for you guys it has been. But yeah, we have been sending setups, quite a lot of them, and all you have to do when you receive a setup is to check it, and if you agree with it, you take it. If you don't, and then don't take it. Simple as that. But we've had a few wins last last week, and we're not gonna get so much into detail about them, but it's good to analyze those wins. And when I say wins, personally, I'm not talking about uh something like this where a pair only moved maybe like Euro USD. I know some people made money out of it, which is good. But for me, this is not enough. I would have been happy if maybe we even went as low as that day, or even lower than that, going down. But yeah, it is what it is. But yeah, this move for me was just a trap move for Friday, so it doesn't really mean much. But having said that, we did have a few or a couple of wins. I remember we did trade AUDUSD, and this one was pretty good because it moved away from that peak formation, and that was very good. Like, these number of pips are very excellent. And one other thing that I will stress out is that if you look at USD pairs very carefully, you realize that they they move in such a way that if AU, maybe let's say this is AU, and then with EU, and then with GU, and NU. So how it's doing it is that AU will go 3 levels up, right? And then EU will go 1 level up, and then into a reset. And same applies with GU, doing the same thing into a reset, and then NU does exactly what AU would have done, into a reset. So you find that you've got something like this. This is why I said you can analyze the market, these pairs, as a group, to say, no, I think USD pairs, this is what they're gonna do next week. And that is perfectly fine. But then going forward, you then need to also go into the individual pair and break it down as an individual pair, just to make sure that it's gonna do what you say it will. So you normally find AU like this, maybe EU like that. So what happens after here is they just continue with the trend because they were going to continue, but then you see also on EU now continuing with the trend. So the difference between these two is that the other one only gave you a reset, and the other one did proceed and move forward with two cyclists. So those are the things that you need to pay attention of. That is why even right now you've got an AU having done this, like move away from the peak, But if you look at EU, it's actually up there. All right, it's actually up there, meaning it hasn't even moved. So that's the difference you are going to encounter. Um, it has happened even a few weeks before where you have AU right now being in a point where it was only moved from here to there, but then EU has moved a complete cycle. If you look backwards, you see that AU has moved a complete cycle, but if you look at EU, it only moved from here to there, just to a reset. So that's the difference. And then after that, it moved a complete cycle. Yet AU did not do that. It actually did the opposite. It moved a complete cycle, and then from there, it did not move a complete cycle. So those are the things that you need to um, look at an individual level, in as much as you are anticipating certain moves when it comes to USD pairs. All right. So we did have, I did suggest EURUSD. That was a very good one because um, we did take buys here, and again buys came after here as well, but mine was just here up to the target was supposed to be somewhere there, I think. Yeah, somewhere around there. But then I took it out at exactly at that point. I just got out as soon as we hit that high, and that was me for that particular day, and that was it. We did have what else? We did have, I think I did send USD MXN as well, the buy from here to there. That was a very good buy, and our target was also sitting somewhere right there as well. And that did buy very well. And if you're following it, you could have taken the sell. Another interesting one was USD ZAR. That one was very good. I loved it. I don't know if I have USDs here. Right. So USDs this one was also good as well. So I gave this one when we were sitting somewhere here. That's where we were. And all you had to do, because that was midweek, was just to hold until the rest of the week, which is Thursday or Friday. Now, the reason why USDs are bought, well, I was actually looking at it on Friday before NFP. So you can see how they actually bought because they had reached level 1, level 2, level 3. So that was the reversal. That's very good. And I loved the fact that before the buy, there was this sell. And I did see someone who had entered a buy, sorry, and they did post it, but not someone in our group. And they were panicking about this entire move down there. But these are the things that the dealer does, trips. He stops around this area. It stops around this area, and then after that, he goes your direction after having taken you out. So that's one of the things that you also need to be careful of, trips. All right. Um, I don't know if there's anything more, but yeah, these are some of the pairs that we did. And looking into this coming week, it's gonna be an interesting week as well, I think. So what I want us to do now is you guys tell me what you think. will happen, give me pairs, and we do them. I don't need too many of the pairs. It's gonna be straightforward anyways, but um, even if we do 3, 4, that'll be good. And as always, we wanna do one USD XXX and one XXX USD, and then we can do two other pairs which are not USD related. At least that way it makes life easier for everyone to navigate through. And then going through the week, if I see clear setups, I can then send them. All right. So, which pair are we starting with? And if you say a pair, you also need to present it. Keep that in mind. If you say a pair, we are also going to present it. Okay. Yeah, if we do this quick, we might jump into indices as derivative indices as well. Look, I don't mind analyzing them and all. It's only that unfortunately I can't trade them at this moment because of my location. But yeah, I can help you look at them. All right. So we've got gold there. Um, Someone has suggested gold. Any other pair? So you say a pair, you analyze. All right, let's go. What's the next pair? So we've got gold. We'll treat gold as a separate standalone pair. So yes, we've got AUDUSD on XXX USD. Now I need the opposite. Someone else to give me the opposite of that. The opposite of USD pairs. Yeah. Like I said, we might get to the derivative indices, but at the moment we are only doing uh currencies. So let's get through the currencies and finish that. USDJPY, thank you for that. Any other pair which is not a USD pair? I want someone else different. Someone else different. All right, maybe people are still thinking. Yeah, well, at least you're still thinking and coming up with those pairs. I will ask Madam Jokemi, do you wanna analyze your AUDUSD?
Okay, sir. Let me try. I'll go to daily, sir.
Daily, okay.
From this daily, we can see that 3 levels has been completed. The first one, the second one, and this is the third one. And the market make a big W, in which you told us upper week that on Euro USD, that if the neckline is broken, that that means the pair is going to the upside. They did, but at the same time they reversed back, just like this one now. So what I'm thinking on daily now is that, can we say this is a triple bottom? Sir, can we go to H4?
Okay, H4.
From H4, the journey is very long. The journey is very long, yeah. But on our left hand side, there is a completed level. here. This is one consolidation, two consolidation, then this one, which is another peak that initiates this drop to this side. And the market make another W, one peak formation here, in which the market moved to the upside last week. I will call this one as a pullback on a H4 now. By next week, based on this chart, we should be expecting the market to go up again. Can you go to H1? Sorry, I'm using a very small one. Coach, please let me clean all this
Yeah.
application. So on the H1 now, we can see a very clear W here. It also made a triple bottom. The neckline was broken. The market came back to the neckline and made three levels: level 1, level 2, and this is our level 3. It make another peak formation to the downside. So to me, this is just a level now. But what I cannot clearly say based on this chart now, there is no any EMA for me to know that is market trying to reset and go up, or this is just a consolidation for the market to complete the level come in the coming week. That one I cannot say clearly. I think coach will help me with this, or maybe if you put Emma, I will be able to say something about it.
All right.
Okay. From what I am seeing here, these are powerful EMA, the 800 and 200 EMA. So to me, I think the market is resetting on H1, going up.
Okay.
That's all I can say about AUD USD, sir.
All right. Good. Okay, so very interesting about AUDUSD, and I love the fact that you did analyze it as an individual pair, without anything else involved. All right. So if we look at it, maybe say right from the monthly time frame, we can tell that we have broken an old low here. All right. We have broken an old low. And usually what the market does is when it takes out some of these lows and highs, peak formations, necklines, or order blocks, etc., it does react when it comes in those areas. All right. So this is why you see this entire reaction happening here is as a result of taking out the low right here. Okay. So now that being said, we then expect the market to go up based on the monthly time frame, but that is not enough because whatever is happening on the monthly will take forever to happen. So it's the entire month. It can be the whole March, like this last candle here is the whole of March, and it has been buying, which is very good to show that we are reacting to that old low. How long it's gonna buy, that's a different case now, right? And I've always said that if you want, you can use the what do you call this? The retracement, right? The Fibonacci retracement. If you want, you can use it and just pay attention to the areas, psychological areas where the market can make tens, and it can come to the 32 and then go down, or it can go to the 50 and go down, or to the 68 and go down. But this is not enough still. All right. You're just checking what you think is likely to happen. All right. Now, having said that again, let's look at the lower time frames. All right. So we go to W1 because that is where we play around most. So based on W1, we can clearly see the reaction of the market in that same area, but still, it's still not clear what's going on here. All we can see is green and red candles sitting around that area. It's good because they are sitting in that area, but we're not sure what's going on. So all we can do is to go to lower time frames. But you can tell that something of significance happened here. Remember what I was showing you last time. What happened here, that was 2 weeks ago. I remember sharing this and saying, yes, USD pairs at the moment are selling, and reason being, we had a case where we took out the high of last week, all the way up to there. So we took out a high of last week, and then we sold the entire move right there. But it even made things harder for the following week. What was going to happen? This is why I didn't trade it, because of the W1, it was not clear, but this sell was clear. That's why we traded it the previous week. Now, if we go to D1, D1 then will start showing you peak formations. So D1 will start showing you peak formations. All right. So this is our D1, and we had a very nice W on D1. And that W, that's the one that you're referring to, that it took out the neckline, which is somewhere around this point, the neckline, the high of it being there. And after having taken it out, it came back and coming back to similar lows. So these lows are all similar, which means it's as good as another leg. All right. Now, notice that on the current market price, we've got that similar setup that I was talking about previously on monthly and weekly time frame, about taking out the previous day's high and then selling. So which means we've got several possibilities. One, we can go the upside way, which is the way that you referred to. Two, we can come down all the way up to there, all right, or a little lower than that before we can go up. Right, let's look at 4 hour and see what the 4 hour is saying. So 4 hour has a peak formation. All right, so remember what I said. I said we might come down to that area before we can go up. Now, you can see the area that I marked there. Maybe let's go back to W1. So the area that I marked there, I'll put a line so that it becomes clear. That area right there. I'll delete this one. So I said, this is where we want the market to come before it can do what you're suggesting it will do. Now, if we go to the 4 hour, that same area that I marked, what's in there? A neckline. all right, a neckline. So I still believe that the market will come back to the neckline, all right? It will come back to the neckline based on 4-hour time frame before we can even go anywhere up. Reason why I sent this as a sell is pretty simple. Again, neckline reaction. So you can see how the market moves. So that is why I gave you the setup there, because we were at a neckline and we bounced off the neckline and started selling. And I expect us to continue selling until we get to that area. Let's look at H1 and see what H1 says. The exact same setup that I gave based off H4. If you want to refine it to H1, you still can, and use the neckline for H1 instead, which is this one. You still can, and still the reaction of you could have gotten a very good entry, and that's why when I sent it, it was based off H1, and this second leg was not there during that time. And I love the fact that they formed the first leg, came down. That's when I gave the setup, and after that they went up to the second leg, took it out, and then went down. So they took out the second leg, which is very good right there. So the second leg was taken out. All right, I'll remove this. So you can tell how the second leg was taken out, and then the market continued going to the downside. So my expectation is that we want to see the market move down from here up to that area there. Then we can decide where the market will go next. Now, where the market will go next will also be dependent with other USD pairs. I hope that makes sense. So now let's say you want to trade this pair. Where exactly are you gonna wait for a setup? If it was me, right, let me try and wrap all this off. If it was me, I would look for setups in this area right here. I would look for setups right there. Right there. Because it's the start of the week. So I would patiently look for something that touches there and goes down, my target being that one day. That's what I would look for. All right. I'm gonna send the setup when the market's open, but that's generally what I would look for. Okay, based off D1, because D1 is the one that's moving this entire thing. So I want to see them go to that point there. Then we can expect the low of the week, and then etc. etc. All right. Does this make sense? I don't know if yes. So if it makes sense, that's good. So it's hard to tell what's going on the weekly time frame at a particular moment, because it's just consolidating. It's just ranging in the same place based off W1. But from D1 going down, we can tell there is some activity that's going on. So we can take advantage of those activities while we wait for our buy expectation. And I also know as well that we've got this M formation right here. And someone might say, oh, maybe we are in the neckline and we're about to go down. That's also another thing as well that made this market to react in that place and not proceed further forward. That's another reason. And there's nothing wrong with expecting something like this, but because it's based off W1, it can take a while. I can show you one of the pairs that we at some point wanted to trade. We waited and waited until we gave up. This is the pair right here. All right, let me remove these drawings. Where we saw this, that was very good. So there are some trades that will never work, all right? We saw that the market came down today. The next candle here, W1 sold, and that was good. And we thought we were going, but it consolidated. We came to this point again, and we thought, okay, maybe we might sell here. We did sell. That was good money. And then the next thing, the market goes back against us until we left this pair. So there are some pairs like this where you expect the reaction around there. And there's nothing wrong expecting that because you haven't seen the future. No one knows what the future says, but then it never worked out. So things like that do happen, but they are more in most times you expect that to actually work out. All right. So having analyzed AUDUSD, I'm sure that's the only one that was sent on the USD part. Now, something to note as well, looking at this uh counterpart Euro USD, I remember I stressed out last week when I was showing how Euro USD is moving and all that, and you can tell how it moved after forming that peak like AUDUSD. It actually went further up. Now, I'm a little bit concerned with the fact that, remember, I said it's reacting to the previous reset on the 4 hour, which then moved to the second level of D1. What do I mean by this? I'm talking about this. You've got an M formation, you've got the first move, you've got the second move, and then you've got the third move into a peak formation, all right? This, okay? So what happened was this is the reset point where Euro USD is reacting to at this particular moment. But reaction itself doesn't tell us any much detail. We want to see something happening. We want to see the intent of reversal. So if you look at it carefully, my worry is that there is a possibility, instead of just reacting in that area, we might want to take out that high. All right. So instead of just reacting to that area, we might want to take out the high. Then we can then look into selling. All right. So having that thought in mind, it doesn't mean this setup is not going to work. The one currently on the chart now, it might work because at the moment, if you draw around your neckline, right? If you draw around your neckline, you can tell that is where your price is. Yeah, right there. Yeah, there. You can tell that is where your price is. You can see the price line right there. That is exactly where it is, right? That's where it's reacting on the neckline, the previous reset, previous old reset. That's where the market is reacting. But you can see the old high around that reset that was marked by that reset a long time ago is just a little above there. So it's a bit concerning to me, and I am thinking Euro USD will do sell and get to these areas, and most probably then do what AUDUSD is doing, which is then go back for that high, take it out, and then we can have the long-awaited sell, because we want to sell this long term. So we can't wait for that. But that is the expectation. All right. If you look at the monthly time frame, all you can tell is this has been buying. All right, this has been buying from the monthly time frame, and we have come to a point where we suspect this could be our peak high and low, and we are at a neckline here, and we might expect again the same for AUDUSD, something similar. But like I said, we can't take trades based off the monthly time frame like this. We can only see the buyers, suspect the buyers, but then we need to drill down to lower time frames to get the exact move that we are waiting for. All right. Having said that, let's look at what else did you suggest? Someone suggested gold. All right, so let's look at gold. Let's look at gold. All right, so Mirai Nashe, you suggested gold. So we're gonna do your gold. So you tell me what you think about gold.
Sure, thank you. Can we relate it to the DXY, or it operates independently?
Good, good. Nobody should still do that with me. Gosh.
You are late. You are late. Someone else has suggested it, all right?
I'm just joking. I'm just joking. Good evening, everybody.
Yes, you are late.
Olu can take USDJPY today.
Yes, he will take a different pay. Yes, that'll be good.
No problem, no problem.
All right, so Miranda should do gold and then he will do USDJPY. All right, let's go.
All right.
What do you think?
Can you zoom out? Can you zoom out a bit? Am I able to control your screen?
Oh, yeah, probably not. Maybe to annotate. Yep.
Okay.
Try. Give it a try.
Uh,
Let me see. I'm using a Mac and it's telling me that I should open settings, blah, 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 blah. All right, let's see about that. Okay, give it a try. Oh, yeah, that's good.
I think I should be
That's good.
able to.
You see, if
Is this me
everyone
moving
could
the
do this,
screen?
that would be good.
So it just has a small leg. So all time gold is has been on the rise and might always be on the rise until the coming of Jesus. However, I'm just kidding. From the monthly, what I see is we are this should I say high, higher low, higher low, or rather this consolidation. Then from this zone of consolidation, uh, we broke out and started marking higher highs and higher lows up to this point. So from the monthly, what we see is a lot of bullish momentum, and maybe we might also just want to take note of is this what we call the CRT, into range theory? We have that nice candle, maybe not exactly perfect, then this pinned candle, then we broke the the opening price, is it, of this one? No, this doesn't apply because we did not break the low.
No, this
But
one is
however,
not CRU. It's not CRUT.
Yes, it's not CRT. I was
So,
getting lost.
hold
Thank
on a
you,
second
Jokendo.
there. So it does apply. It is CRT, but it's not one of those clear ones you would want to trade. So how you would trade this, you would say this is your high, your low. This is your candle range, this one.
Okay.
And then this candle is the one that broke the low of that range candle. All right. And then after breaking the low, it then made sure that it closes above. Then this candle,
Okay.
you were going to use that candle as your entry. That doji there, when it comes back, you are going to use that as your entry. And most probably, you're going to just close out the market in small loss. And then eventually, the following week, that's when you're going to get what you have been waiting for and close out the market on the candle range high. So that's still candle range theory, but the difference is that this red candle here is not a doji, it's just a normal big red candle, and I would not advise you to trade such trades. It would have been good if you had two dojis side by side. That was going to make sense. So I would advise don't trade this, but then if you wanted to take a risk, you could have taken a risk and ended up having it pay you. I guess that makes sense.
Yes, it does. It does.
All right. You can continue.
Interesting. Then maybe going down to the weekly time frame. This one should be able to show us the higher highs and the higher lows more clearly. So from that consolidation, which we noted earlier, we marked a high, higher high, higher low, higher high, higher low, higher high, higher low, and recently marked a higher high. So we could expect a higher low followed by a higher high, just from a general point of view. However, this does present an interesting view in the sense that we just had that perfect candle, and this candle took out its high. The high for this one being, or this one doesn't show. It looks as though it did take it out. However, maybe the 4 hour or daily will give us a clearer perspective. But from the weekly, I'll just mark that we simply made a higher high. We can expect a higher low. From the daily, what we see is before we add the moving averages, we had this consolidation, which would, all right, we started from right there. We had that whole consolidation sort of the head and shoulders pattern. The head and shoulders being shoulder one, then the head, then shoulder two, then we went up. And this looks like a complete cycle that we got, which then led into us having this reset, as we may want to call it. Then from this reset, we then went up, which appears to be one level. From this consolidation, we have gone up one level. So from D1, we can say we have moved one level up. H4 can help us confirm this. So for purposes of analysis, we may focus now on this section, right from this consolidation and then going upwards. And we have some interesting price action there. Going down to 4 hour, the market is showing us right from that consolidation we were seeing on D1, we have moved almost a complete cycle. Are we able to add the EMAs at this point? All right.
Let me add them for you. Just the EMAs?
Yes, just the EMAs. Thank you. So from what we can see here, the consolidation we have actually was a good reset because we're dancing around the 200 EMA at this point. Then from this 200 EMA, we have done, so from this 200 EMA, you can see we've moved 2 cycles. That could be H1 cycles. The first one being the cycle from this point to that point. Maybe we can change the color for this one later. Then this would be a reset on H1. That's 50 EMA on H4 is 200 EMA on H1. Being that reset, we then means we have done another cycle to that point. So from an H4 perspective, we can expect that we have gotten, sorry, this is where it gets interesting, where you confuse yourself. Right, so from this big H4 reset, we can visibly see from what I'm seeing, we have done one level up, one H4 level up, and we've gotten this. The matter of fact, we've done one H4 level rise, one H4 rise all the way up to that peak formation there. Yes. And this is the H4 reset. Now, within this H4 level, you've got the H1 cycles. So we can expect the markets to take us further up to get another second H4 level and possibly a third going upwards. So maybe for the purpose of our analysis for this week, from this peak formation on H1, we came down to the 200. This would appear as a reset on H4. And so H4, we are expecting to proceed going upwards. That would be my assumption. Then on H1, from the most recent peak, this does not look like we have a good 3-level move, but this is 1 level drop Then we have that. Perhaps let me use the arrows. Uh, arrows should be easier. We had one level drop, then consolidation, and then we had a second level drop, which was giving us the H4 reset and not necessarily the complete H1 cycle. So what this would mean is on H1, we are probably still in the same first level of this downward cycle. So we might expect the market to complete its move downwards and take us higher. However, we have this peak look that is already okay. And we have this 5200 crossover, which signals a high possibility or a strong trend upwards. So from this consolidation, I would expect the market to either dance around this area a bit for this week, drawing the EMAs upwards drawing the 800 EMA upwards before proceeding up, or if it's to proceed downwards, it will be giving the second leg of this H4 reset before it can proceed upwards. Yeah, this is what I can anticipate.
All right.
This one. Are you able to open this on MT4 just to check the ADRs? Yes.
Go.
Right. Thank you. Thank you. So like we were saying, or like I was saying, on H4, we've done this whole move from this peak, and we've moved a complete cycle up to that other peak there. Then from that peak, we've done an H4 reset. From this H4 reset, we've gone on to close above that 50 EMA. So on H1, to check the ADR ranges, all right, we cannot see our ADR.
Yeah, for gold. Yes.
ADR. Yes.
Yeah,
We are not able to get these. All right. However, if we make use of this this triangle, this rectangle, we'll find that we've moved that's about 50 pips, should say. Then if we have the 50 pips there and we so from this point, we notice we've moved 2 levels already. So I would say we'll either hold this level for this week and go another move higher, or we might retest, which is very unlikely to retest this 800 before proceeding up. I would I would prefer the option to hold this level or go straight up until we reach the high of that previous peak somewhere there. That's my anticipation on gold. Yeah, we move to the area there.
All right.
That is not an easy one.
Um,
Thank you.
Okay, that's good. Okay, okay, okay. Um, all right. All right. Just a second. All right, so let's move forward. So this is gold, and someone is saying, how important is fundamentals in your analysis, coach, given what's been happening with Trump tariffs and Elon definitely influencing the markets and operation and the effect on the dollar. So, okay, before I do gold, this is the thing, right? Fundamentals, to me, they are more of an excuse to move the market to a certain direction. Because right now, as it is, I do not see the reason why all of a sudden gold maybe say can drop from here until 2400 price just like that without giving a setup and all that. And I'm not saying fundamentals are not important. This is what I was addressing last week, that you need to be very careful when it comes to fundamentals, especially the ones on the economic calendar. But if you're talking about fundamentals in general, to say the news that's happening, yes, 100% that will definitely influence the direction of the market. That's, you need to know what's going on in the US, follow the news, and that on its own will have a bearing on the US dollar. But if you're talking about the fundamentals, which is the economic releases on the calendars, those ones, I said last week that for me, I can't have them define how I am going to take trades. Like, for example, let's just say on this particular day, we're expecting that there's going to be news, whatever news or NFP on this day, right? We want to see NFP go down, okay? I need to already have seen the intention of the market days ahead of that move. So that means that when that day comes, it's either I've got a pair, a position running in profit, or I'm out of the market completely. For example, if you had taken a buy at this point, right, last week, if you had taken a buy and you had NFP happening here on Friday, your stop loss was gonna be maybe say in profit, right? So for me, what happens to NFP on that particular day has no significance, especially if I have a running position. One, if the market comes and takes out my position or continue going down or go up, that's fair enough. I call it a day. If they continue going up, then that's a blessing for me. Without coming down, that's even better. So that is how I trade. So I do check my calendar every single day, but the way I then put my positions is in such a way that when news come, I should be in a better position. Maybe, let's just say I bought here, right, where there is a consolidation. Maybe I bought there on the first day of the consolidation and nothing happened, and I've got NFP coming. In these sort of situations, I move out because I'm not in a profit and I'm in a position where I'm as good as someone who just entered during just before news. So it doesn't help me. Then I go out. But if we are talking about fundamentals, which is news happening right now, then yes, definitely that influences the movement of the US dollar. And so you are supposed to look at things like that, follow them, and make sure when Trump says this is what's going to happen, blah, blah, you also look at it and see how the market reacts. You follow those things to see whether the US dollar weakens or it strengthens, because that's very, very important. And with the war happening in Ukraine and Russia, you know, this has been influencing the market for a long time, and we've seen the results of that, which is you also need to be careful about things like that as well. You need to know what's going on and how it negatively or positively affects the US dollar. Right, so we can't take fundamentals away from trading. You need to be engaged with them. Now, looking at gold, I'll go straight so that I cut this short. Looking at the daily time frame, I expect gold to be a sell. Personally, I expect gold to be a sell, right? But how far gold will sell will depend on how far the market wants to go. So I've got two areas. Area number one, which is that high. So I'm expecting we come to it and then go up, or that low, which is where you are seeing the 800 EMA. I'm expecting either we come to that low again before we go up. Now, the reason why I'm saying that is because of the price action that is happening or that happened in this particular point here. All right, the price action that happened here. So you can see how the market formed the high and then came all the way down and started consolidating right there after marking the range and not entirely taking it out completely, the low of that. So I would have loved to see the market tank down to that 800 EMA or even lower than that, which is the old high, before we can see it go up. Now, this is the first version of what I expect to see happen. So all that will be dependent on what the setups brings up. You then also have a scenario where you are expecting the market to go up and take out or match that high before we can go down to that low. All right. So I'm expecting us to go up to that high before we can come down to this low. So that means that's another situation where we can have a buy all the way up, form a second leg, and then come back down. Or that becomes our second leg and we come back down. So now, looking at the lower time frames to see which one is the most favorable, I'm leaning towards the first one, simple because this entire consolidation is because of being at this point in the neckline right there. That's the reason why I'm leaning towards the first one, that maybe because of the reaction on the neckline there, and with that whatever, I can't call it a railroad track, but yeah, something like that, you can tell how the market has given us another M and is probably ready to go down back to that low. So what you have is an M formation, a V, and another M formation there. So I expect something like that, right? Something like this. That is what I expect. So which makes me lean towards the first option. Now, if we go to the 1 hour time frame, the way you counted your levels was very good. So, which then makes us believe that because we are at a consolidation area there, based on H1, it makes it hard for us to make decisions. So what I will do is I would let the market get out of that consolidation, that is maybe come up and form the high like option 2, and then I sell, right? Or have the market come out of that consolidation and I know they will try to come back in to test it, and then I can take a sell from there, going that way. All right. Now, if you want a straight buy from here, like let's say they've already formed the V line first leg and you want to see a buy, you then expect something like this. You then expect something like that, whereby you buy out of that area, come back and retest that same neckline and those same highs, and then see the market continue. So these kind of trades, I will not take it myself because they are soon after a consolidation. So those are the things that you need to take note of. They are soon after a consolidation, so I can't take them myself. They are of no use to me, so I'll let the market go rather than trying to catch a move. And I always say this all the time, when the market is consolidating like these guys, just stay away. Like you try and enter a buy on this particular day, you enter a buy, right? And then it doesn't profit you. Second day, you see something like this. On the third day, all right, on the third day, that is your last day of trading, leave the market. Don't try and force it. Even on the fourth day, it's going to be the same thing. Don't try and force it. No matter how many times it holds that level, it's of no use to you, because if you try and put a buy, you're going to get hit and then you get out. You put a sell, you get hit and you get out. I remember when someone was asking about this when it was actually selling, and I did say that it was going to go all the way down to that low right there. All right. And that's exactly where it got to at market opening price, that low right there. But I didn't trade it myself because it wasn't making sense that it has been consolidating for 2 days, and the third day, then I expect it to move on me. So if it's a consolidation, just leave it, guys. Don't attempt to trade it. You can see here from the 15 minutes time frame, it's been holding that range for 1, 2, 3, 4 days, and there is nothing that shows the intention of what the market wants to do. Such cases, if you were holding a buy, like I said initially, if you're holding a buy down there, this wouldn't affect you. But because you're not holding any position and you want to try and enter, I would say wait either for the market to break out, or for the market to go and form a peak up top, or for the market to sell, retest, and then go back down to that low. So the only trades that you are looking for are in this area. Those are the trades you're looking for around this area, not in that zone there. In that zone there is no trade for you. All right. Unless that gets broken out and you can see that it's been broken out and has been retested, then you can say, okay, I'm taking a sell. Or maybe you're taking a buy, broken out and retested, then you can say I'm taking a buy. And you should make sure that breakout is a clear one. It has to be a clear one. You can't take chances with it. All right, I will show you. Think gold once did this some time. Let's see. I think it once did this sometime. I can't remember. All right, maybe let's not go too far. We can use this as an example anyways. Right. We can use maybe this as an example. Let's just say you are looking into putting a market, right? Consolidation, right? You're not sure where the market is going. Now look at this. Look at how you consolidate inside the range, and then you break out of the range, like a clear breakout because you've got too many candles going out of there. And then you come back into the highs of that range. You take your buy from there and off you go. So that's how I would attack it. Let this be and take a high from a buy from there and go up. Then I can start counting my levels, something like that. I guess that makes sense. Maybe we can use this as an example as well. But this one is not really a consolidation, but we can use it to show what I'm trying to talk about. Say this is a consolidation, it's been consolidating for a long time. Your setup is right there. That's where you're looking to take the trade from, right? Not inside the consolidation. So always be mindful of consolidations and let them be right there. All right. Consolidations. The market has a tendency of coming back. It has a tendency of coming back. So you've got that consolidation right there. And then breakout, market comes back, and off you go with your buy. All right. It probably even came back again for the second time. And off you go. But that's how I would take it, right? You can see how here they pretended to be out right there, but then quickly went back right in. So I want scenarios where we go out, like actually go out with candles that I can tell that, yeah, now we are out. Here, the only thing that I can see out is only this red long candle. That's what came out. And then immediately they started going back in. But I want to see a couple of candles going out, especially if it's higher time frames consolidations. All right. So yes, gold is a good trade, but the fact that they are holding the range, to me, I stay away. I do not trade something like this. So it's of no use to me, unless if it was happening on a monthly time frame and I'm trading the H1, maybe that was going to make sense. But because it's happening on H1, it makes this trade pointless at this point. All right. Mirai Nashe, you wanted to say something?
Yes, yes. Thank you. Thank you very much, Coach. This is quite enlightening. I forgot to check something, the TDI, or
Okay.
maybe the H4, the H4 TDI. Yeah, given this, I think the sell actually makes a lot of sense. Shark fin, then the price line
Yeah,
is
so
just about to cross the
yeah,
FBL.
so there's a possibility we might do that and then come to the Bollinger Band before we can see them go back up. So we might
Going
have
up.
something of that sort. But again, like I always say, keep both options open, right? We
Yes.
can't depend on one option because we don't know. This is in the future. It's still yet to happen. So keep both options open and just say once we break out of that consolidation phase, these are my expectations. And then you work based on those expectations to say, okay, if they break out this way, this is what I'll do. If they do it this way, this is what I'll do. That's how you need to be careful about the consolidation phases. So I personally don't have a way of trading them, and I don't touch them. That's what I do. All right. Okay, so where is Olu? Is Olu around? You should do USDJPY, and then from there, I think that should be it. Then we'll see something else that we can do. All right. Yes, let's talk about USDJPY, please. Where do you want me to start?
Anywhere you want me to take the direction, as your lordship pleases.
All right, we'll start from day one if you like, or you want week one or month one. It's up to you.
Okay. Well, let's start from the please, can you take me to MT5?
Oh, MT5.
Me, I'll be Ajekpaku.
All right. Do you want Asian boxes?
No, you can remove all this one. That's so far that everything, just leave it and let me. So now let's start from okay, good, perfect. As we can all see from this place right now, we can see, let's take it to what they call it, that'll be weekly. Thank you. Okay, so on weekly basis, this market started from this region whereby the price gave us this, a push, then also a push again to this level, then also we had this, which make it a complete one on the higher time frame, which is then they are giving us a nice M formation. So which I love that perfect hem, which shows me that I'm expecting a sell, even though if whether it's gonna go or not, we'll still be expecting it to minimum of 200 EMA. That's what I am expecting on monthly time frame, but because the monthly time frame, we can't use that to just jot the information. So can we go straight to daily time frame? When we come to daily time frame right now, we can see that on monthly, the market is trying to show us what we call a sell formation. Sorry for that.
That's all
It's
right.
trying to show us a sell formation, which he gave us an hem here. I want to look for annonate. I'm coming. So which it gave us a good M drop W, then blah blah. So it dropped. He gave us this, gave us this, gave us this. So who knows if they are still gonna come? But look at it. It came to this W formation where they are forming a reaction. So which it means that with this higher time frame, there should be a pullback to 200 for the continuation of this cell. For the continuation of this cell. So due to W1, we are still seeing a good cell formation, and they have pushed on daily 1, 2, 3. So which I'm expecting a W to reset back to this 200 to give us a nice M, to give us the second level of the weekly. So monthly, on daily, I'm expecting a buy. So let's go to 4 hour moving now, 4 hours. on 4 hours, that means the movement might likely come to this 800. It might likely come to this 800, looking at 1, 2, 3. So I'm expecting a W here, come here, then give us a nice this thing and drop it down to the next level of W, which is weekly time frame. So now going to with this formation right now, with this formation, if we zoom out the candle out very well, we can see that from this place with the TD high, let's open the TD high a little bit. TDI, don't fuck me up now. Yeah, open up. Boss of all bosses. So yeah, help me to open the TDI. Give up. So now on this TDI, we can see that the price line is also resting there, giving us a nice peak formation, but it's not yet clearly shown. But I will look at it that this is my first leg. It break the 15 moving average, then return it back to this level, which I'll be looking at. Look at this candle. It is not a perfect candle, but we can see that it break it and it closes inside. That is the reason why the market has started buying from here. And our stop loss supposed to be below this place. So I'm expecting a buy to this level. So finally, let's go straight to 1 hour time frame to go and see our reset that we are expecting on 4 hours. So now, okay, thank you so much. So now, based on that, we can see clearly that this market gave us a nice, perfect W. It gave us a nice, perfect W here. It didn't break, so it returned and is doing this right now. So which they hit the market to 1, 2, 3 low. So for me, I'm expecting a push to this 200 EMA, or if you go beyond to this level, give us a nice M. But all I'm expecting is that I'm expecting a full 3 push, 1, 2, 3, to complete the reset of 4 hours, which will now turn to the one of the daily that I'm expecting here on daily. Let's see, let it come out perfectly. I click daily right now. Sorry. So for the now, this is 4 hours, so I'm expecting 4 hours to come to this place. So let's mark it. That's what I'm expecting. I'm expecting to come to 800. So that will determine. And let's look at daily also finally. On daily, yes, this is where I'm expecting daily to come. And also weekly, that is, I'm expecting a weekly to still continue the perfect sell. So which means what I'm expecting to drop to this 200, there will be a little pullback here, then good continuation downward. So finally, on the 1 hour time frame, nice one. I'm expecting the price to come to this 800. So which means that the market will push level 1, level 2, then level 3, then formation, and look for a perfect sell. So as we can see that this is a perfect candle here. The price broke it, closes here. So if anyone has picked a buy there, so there is a, sorry, even this is a place, but like our coach said that this is not a doji that you will find it hard to pick it. But for me, I will pick the market here because this price came back to give me a discount, which has reduced my stop loss. So I will put it below here. That's where I'll put my stop loss. Then expect the market to give me level 1, level 2, level 3. But if for the cases of teaching and learning, I will expect this price to perfectly break here before anybody can think of sell, because to me, I can be calling this one a ranging spot. So I'm expecting a breakout. Yes, then from this spot, we can look for every of our formation, continue level 2, level 3, bam, bam, drop. So thank you so much, everyone, and thank you so much, coach, for giving me the privilege. Good evening once again.
All right, thank you so much for that. I can't fault it. I did look at this pair because I've I've got a running position on it, so that was my expectation as well. All right. So I've been on a sell since last week. From where? From right here. Yeah, so I've been on a sale last week from right there, and my first TP was that one. And so what I'm anticipating now is that we probably come down here, then I can jump out, take a buy, and go with it around those areas there. Or if they open with a market gap from below, that'll be good. I'll take that as well. If they open where they are and they start by going up, then it means I'll have to close my position. All right. So yeah, I don't want to waste time on this one, but that's exactly my expectation as well. I'm seeing a buy, and so I need to find a way to get out of my sell with good profits at least, and then I can take a buy from there. All right. Now, I wanted to show you something. All right. So I wanted us to talk about okay, hold on a second. All right. So I wanted us to discuss about necklines, not too much, but a little bit about them. So let's take, for instance, you're looking for a setup. Now we're no longer analyzing, we're now doing a lesson, all right? Let's say, for instance, you're looking for a setup and you've arrived around your level 3 right there. And then you're saying, okay, for this pair, I'm expecting to see a reset, right? You want a reset, 100%. Now, if I can ask you all here, do you see any reset? Tell me in the chat page, yes or no. Do you see any reset?
Coach,
Be quick.
put EMA so that we'll be able to.
Okay, I'll put the EMAs.
I think with that, two rice, one rice and a half rice. So I think there's east, and there was a M formation there. 1 day rice, then another half day rice.
So what I want to know is, do you guys see a reset or no? All right. I want all of you to tell me, everyone, to tell me whether they see a reset or no. So you can type yes or no, I can't see it, or I can see it. You're expecting a reset. Remember, this pair was selling, so you're expecting a reset. So do you see a reset or no? Only one person has answered so far. What she's saying, we can see it as well. I can't have 2 people out of 12 people. All right. Someone is saying no, and 3 people are saying yes. All right. So I'll continue. Now, look at this. So that's your peak formation, and that's your 200 EMA, right? You're expecting a reset. So what's happening here is that your reset is not there yet. but you are expecting it. So this right here is not a reset. All right. So all I'm saying is it's not like if you see a certain price reaction, you can then assume that, yeah, I think they're forming an M there. This right here, to me, doesn't even look like an M. Like, I don't know if you know what that is. That's just price sitting in that area. So be very careful. This is why we always say we want a multi-days type of a thing. So we want to see multi-days, all right? When we are saying, oh, we are at a peak formation, we want to see it forming in a number of days. So that's one of the things that make you people make mistakes, because you want to see a sell. Good, 100%. Your analysis is 100% right. But can you see the reset now? The question is, the answer is no. There is no reset at the moment, right? You haven't seen it. So as long as you haven't seen the reset, do not sell, right? Now, if we move the market, okay, now look at what's happening. You can then suspect that maybe the reset is not going to happen, okay, because you're seeing this in real time. So you suspect maybe the reset is not going to happen. That looks like an ID50. All right, can I be wrong with trading the ID50? Yes or no? I know
You
I
are
want
right.
a reset,
No,
but can I trade
no,
this ID50? Yes or no?
yes, and it
Hmm?
can be traded. It's
You can
sitting
take it
by
because
small
it
line.
came to test the neck.
Exactly. You can trade the IT50 because it came to test the neckline, right? Yes, you're expecting a reset, but at the moment, the market has offered you a setup. The setup is the IT50, right? This is one of the setups that I traded, I think it's a week or 2 weeks back, I can't remember. But yes, you can expect the trade because it's an IT50. So you're expecting a reset, but the reset is not there at the moment. So even if the reset comes, we suspect this might be the neckline. That IT50 might be the neckline. So I'll take my buy and get the buy and enjoy my money until, all right, I'm still seeing that everything is working well until I see something like this. So I already have my stop loss in profits. And then the moment I see that, maybe I can move out, right? Because I'm already at the high anyway. It gives you a chance to get out. Then I can move out and say, enough is enough for me for today. And then what happens next? The next thing, you are back, right? Now, you are back and you test the same area that you entered in. Okay. You might be tempted to take another buy. I know that. Look at that. Because you're expecting a reset, right? So you took the
Sorry, coach.
IT50 trade. Mm-hmm.
Coach,
Mm-hmm.
what I can see that you are literally trying to correct us for is because me too, I do look at it that way, that this is not a perfect here. This is not a perfect because it didn't break with the full body, the candles. This is the one that break with full candles, then went to clear the liquidity up there
Yes.
before dropping it
Mm-hmm.
down.
Yes, 100%. So until things like that happen, then we don't have a trade. So you can see how it cleared liquidity up there to show you that, yes, we're now forming an M. So when it comes the second time, I will not take the trade because I've already made my money on that particular day. So I can't take the trade again for the second time. Well, for me here in Australia, that would be happening in the middle of the night. So I'm not going to see it anyways. But for you guys, probably it will be happening in
So
the
we are the one
afternoon.
that
You
will set
might be
into the
tempted.
trap.
You might be tempted, all right? And get your stop loss hit. Now,
Maybe
Now
me
that
too,
I
I will
have
go
an
to Australia.
now that I have an M formation, right? Now that I have an M formation, which one is my next trade? Please tell me. I want all of you to speak so that at least it helps you guys, because this is going to help you. This is in real time. You don't know what's going on in the future. So which one is your next trade? I will remove this box. All right. Someone is saying IT50 or the neckline. Is that correct?
Yeah, the neckline.
All right. Yep. Someone is saying the neckline. All right. Let's see. So what we're going to do is put a box in the neckline area right there. All right. You can even put a, no, let's do it the professional way. All right. Short position somewhere there. All right. Stop loss maybe a little above there. I know. Okay. Me personally, I do not trade with the stop loss initially and until my market gets into substantial profits, then I can then put a stop loss. So I leave the market open. Right. Where is your target? At this point, your target is the previous low, right? That's how you want to trade. Now, let's see what happens. So here's targeting the high. So when it reset back to the neckline sell 100%. So we're together. Now we move. So this is a new day. All right. This is a new day. Look at that. You get tempted. All right. You get tempted because they moved straight to your target, unfortunately, without you. And you get tempted to take a sell, right? Which is fair enough. Sometimes you might win, sometimes you might not. And then you're still in profit with your your temptation position. And then this happens, right? Right? You're enjoying, which is good because you're in profits. And then us who are waiting around the neckline, we get triggered. So do you see how you are trading without a setup? Like you do not have a defined setup. All you were doing was, yeah, it's gonna sell, it's gonna continue selling, and then you get on to the trade. But
Garbage in, garbage out.
exactly, but someone else is waiting in the neckline saying, I'm not taking this trade until they come to me, because that's the expectation, until they come to me. Now, what happens next? Your stop is probably hit already, but for us on the neckline, we're probably still good. Okay. Now they've come and hit our target. You move out. If you wanna keep holding, that's entirely up to you now. Next day. Right. Now, after seeing this, okay, I want to show you something. That is another neckline set up there. But because the M is not that pretty, you probably might miss it, which is perfectly fine. But because we've broken that low, maybe that could be another area of a setup in the near future. All right. So that serves as a neckline, either this or or that part, or that part, all right? Either of the two. What I mean is this part or this part, either of the two can serve as a neckline. You can see how the market has arrived in that same area, right? It's a same area right there, right? I can take a sell. Oh, come on. I can take a sell. Maybe, yeah, anyway, right there. I can take a sell and put my stop loss above 50 EMA. All right. And it becomes hard now to know what exactly am I targeting because of the right-hand side. But you can target this low, or you can target anything a little lower than that. Okay. Let's see what happens. See that? That's next day. See that? So your target has been hit during news, because that was the news candle, and then you're out. So that's how you can utilize the necklines and use them as areas of setups. So you have this one, you have the one on the right hand side, you have this one, and you have that one. All right. Now, because we're expecting a buy, we also have this one, which is why we're anticipating that the market, if it comes down here and then goes for a buy, that'll be really good. So you can use your necklines as setups. That's why when we were on AUDUSD, I kept on referencing to that. The reason why I sent the setup was because of this. All right. If you look at it from the 4-hour time frame, it's actually reacting to this. So that's all that you have to do. You just look at the neckline and say, okay, this is my trade, right? This is my trade. And then you take the trade from there. All right, let me do this. All right. Okay. Gray, I'll give you the floor in a second.
Okay, coach.
Right. So there we go. So, okay, you've counted 3 levels, right? But at the moment, there is no peak formation. All right, there is no peak formation. There is no level 3 at the moment. You've counted and you've seen that I've arrived into level 3, but without a peak formation, this is useless. You can't even look for a buy because there is no buy to look for. So let the market print out what you are looking for. All right, let the market print out. Right. Does that look like a W? Maybe, maybe not. But for me, if it's like this, it's not even clear, right? Or I can expect the market to come back down there before it goes up. At least then I can say, okay, that's a proper W, right? This is my expectation. But this is better in the sense that you've got day 1 and then you've got day 2. So you can then say, yeah, maybe it's just an ugly W, maybe, right? And then you just wait. But if it was me, I would have expected them to come to my area. All right, next day. Look at that. Now, it's miles different. That is why I always say, if it is unclear, don't take it. See how this W is different from what you are seeing. All right. And I will emphasize again, as long as the market hasn't given you what you are looking for, don't attempt it. Good thing is they've taken out the first leg. All right. They've cleared liquidity in this area right there. Now I can say we have a peak formation. Same applies with up top here. All right. This one, look how they formed the first leg, and when they formed the second leg, look how it's like. I could have taken it only on the basis that the neckline is clear, but they didn't clear any liquidity up there, which is still fine, but the neckline is clear, which is good. However, I suggested this sell trade when we were now somewhere here, because it was now clear that this is an M. So it was going to be hard to take the second leg, but it was going to be easier to take it at this point on this day, which is where I suggested this trade. All right. So this is some of the things that you need to take note of. Wait for the market to be clear, right? And then look at that. Okay. Now a proper W is forming because it's different days and they are showing you that multi-days W. All right. All we need is to break the neckline and then expect our setup right here, right? That's where we want to buy. And I don't even have moving averages, okay? That's why I'm expecting the buy.
Sorry, coach, for cutting you. In this situation now, we have like three lines. Which one are we going to consider? Is it the first, the second, or the third one?
Right. Number one, I will not consider this neckline because remember I said I do not trade this kind of W because it's not clear to me, right? So I will not consider this neckline, but I will consider these two because now I can see the first leg and the second leg and the third leg. But because the second and third necklines are nearly in the same area, so I can put my trade anywhere around there. But it's entirely up to you to decide which one you want to take. You can take that one. You can take this one. It's entirely up to you. There's no what do you call this playbook that says, no, you need to take the second one or the first one. It doesn't matter. It's entirely up to you. If the trade misses you, that's it. All right. But I would gamble with the lower one, simple because I want to be in minimum loss as compared to taking the higher one. I don't know if that makes sense. Like as opposed to me putting my trade there and putting my trade there, I will take the line below. If it misses me, that's it. But I will take that one because it's less loss compared to that one. All right. I hope that answers you.
Yes, sir.
But at the end of the day, they both get triggered. So you can see, oh, come on. Okay.
Sorry, coach. Before you proceed, sorry, coach. Yeah, I have a question on the neckline trade. Can you hear me?
I can hear you.
Yeah, I wanted to ask on the entry part. Do you wait for an example on the current one? Do you wait for a clear W or you just enter once it hits the neckline?
All right. So both. All right. Both. Let's go to the 15 minutes time frame. Okay. So here's the 15 minutes time frame. all I'm looking for is a signal for reversal. One, I can enter just for the sake of entering, and I don't mind. Sometimes I do that. Sometimes you can wait for a setup, right?
Okay.
Something like this. Because I've got a railroad track, I can enter my trade there. Does it make sense?
Yeah, it does.
Because I know a railroad track is a what? Is a reversal pattern, right? Or a morning star or evening star or a pin bar or anything like that. And I'm pretty sure this could be a pin bar on the no, it's not. It's also a railroad track on H1 as well. But that is how I will take it. I would enter right there as a buy because that's a reversal pattern.
Okay.
Right there. So now you are in the trade after the railroad track. All right.
Yes.
Yeah, that's a very good question, by the way, because sometimes you can just jump in and then you get bent out. It happens, but yeah, it's good to have a reversal pattern in that area. So I'm taking the reversal pattern and then have it go. Sometimes you can have a W, like in this case, the market has formed a W, but then, like I said, some of these Ws are not easy to predict. So you need to be very clever. All right. It's the leg is so short in such a way that if you're waiting for the W, you probably have missed the entire trade. All right. Not knowing whether this will come down. But it clearly doesn't look like it's going to come down anytime soon. All right, let's go back to H1. Now that you are in the trade, where is your target? Number one, your target can be on the previous high where the reversal came from, or you can target the opposite neckline, which is a bit ambitious right there, or you can target any high that you see on your left-hand side. Maybe, for example, this high right there. All right, let me mark it this high right there. That high right there. Any high, any old high. Fortunately, this one is also on the neckline for the 4-hour, but that is what I would do. All right, and then wait for the market to sell. Now look at the reaction around that and the previous high. I will show you another trade that I got out of and I regret it. I will show you that one. Now, look, you've hit your TP. Now, remember, you've hit your TP, but you're where? At a neckline, right? So that means now we're looking for sell setups, but there is no sell setup at the moment, right? There is nothing at the moment. It's all but a buy. Okay, so this is in respect to necklines, but I'm not saying that just go and look for any neckline and start trading. You need to back test this and see that, okay, there's a reason why we turned into that neckline. Okay, look at that. So if you had just entered on a neckline for the sake of it being a neckline, maybe your stop loss would have been hit a little bit there. There's still no M there. Okay, there's still no M. It's just the market doing its thing. Now, look at that. Now that shows me we might be forming an M. I know it's on the same day, like the M is on the same day, which isn't pretty, but at least I'm happy because we have cleared liquidity above the first leg. But then again, because it's forming on the same day, I'm probably not going to take it. But I remember I did call out this trade, which is perfectly fine. You can still trade it. Now, let's say you missed it. Neckline. In the neckline trade. That's where I'm going to take it. Okay. Now I'll go to the 15 minutes and wait to see what kind of setup comes there. playing music. All right. Right there. Unfortunately, this one got missed. Can you see it? That was during news. This one got missed. So you can see how your entry was going to be, but they missed it with just a few pips. And that is okay. There's nothing you need to worry about. That is 100% okay. It has been missed, and that's it. Just let it go. All right? Let it go. And it doesn't look like it came back. It did not. So let it go. But if you look at OD card. OD card. That's the pair I wanted to show you. This one might be an interesting one anyways. So OD card, this is what it did on me.
If not because coach is married, I would have given you my grandma. Don't worry, but you are married. Because this is just a answer to many of us questions. Or let me just personalize to myself. Don't let me commit a fallacy of instant generalization. I would say this is answer the password question that I've always been looking at. That because there are some W that ask a leg, I will pick it and I will finally want my hand.
Yeah.
So thank you.
Now, neckline there, right? I would expect a trade there, but we are not there yet. So I'll just put a box and leave it there. All right.
Sorry, coach. Sorry, one question. Why did you pick this one as the neckline? Why this one?
Right. I'm looking at the W, this W. All right. And you are looking at this. Sorry, I said WM. You are looking at this.
Yes.
That's what you're looking at. And I'm looking at that. All right. So they are both necklines. But if you look at maybe say the 4-hour time frame, the neckline that I picked is for the 4-hour. The one you picked is for the 1 hour. So like I said, there's nothing wrong with which one you want to pick. So you pick the one for the 1 hour because that's an M, a W, and an M. But I picked the one for the 4-hour because of that bigger M there, depending with which time frame you want to trade. Or alternatively, what you can do is this. You can put your line, your box there, and say, that's my neckline, and that's my other neckline. But remember, you're doing this after an analysis and when you have seen where the market is going and etc. and all that, right? So you've already analyzed. Now, by saying this neckline or that neckline, it depends with where the market wants to go. And again, you wait for a setup in any of those two areas. So let's see what actually happened. So this right here down there, assuming we are expecting a reset for some reason, or whatever, there is no W at the moment, right? So be very careful. There is no W at the moment. Your first leg is most probably this one, right? But at the moment, there is no W. So don't get tempted into thinking you have a W, right? Right. Now, this does look like a W. Very good. But I do not like it. Remember what I said? Because the second leg is just too far away from the first leg. Like it didn't even make an intention to come back down there, which makes me think there is a possibility we might come back to that same area and go up. All right. Or even lower than that. We might. So I do not trust that kind. So I do not trade. I'll just let it be. All right. Now look at that. we've gone all the way to that neckline. If you wanted to sell from that neckline, maybe from the 15 minutes, you could have taken a sell blindly there. Right? Now, something is happening. So remember what I said? Now that looks like a good W. But again, you still do not have a trade. Now, see how this is like. You have broken through that neckline, which you took a sell on previously. All right, you took a sell and sold all the way down to that. And now you have broken through it. So it means for some reason, they might come back down and bounce there and continue going up. So that means this neckline will have to give room for this one at the moment, right? So I'll show you where I went wrong. So I'm in the trade, right? I took my trade and we came up and then I started seeing these reactions right there. So I was in the trade, nicely in the trade, and I think I entered somewhere around there because I saw it late. So that's why I entered somewhere around there. And you can tell how deep it went, like a little further than what you would have anticipated on your neckline area. And when you say neckline, look at the highest candle and draw your box based on the candle with the highest wick. All right. But sometimes some of them are ridiculously too long. Like you have a big, massive box, which doesn't make sense. If something like that happens, maybe let's say this green candle, this one is the one with the highest wick, and you are meant to draw it as your neckline. Now imagine how big that neckline is. You need to switch to the 15 minutes time frame. You will find a candle there you'll find the same candle but distributed down into pieces of candles, and then you can use that one from the 15 minutes as your neckline. Does that make sense? So there are cases like that where your neckline is a very long candle. You can go that. Same applies with the second leg. You want to trade the second leg or maybe an order block or whatever, and you say, maybe for this one, like this red candle here, and you say, the order block is this big red candle right there, which is too long. So all you need to do is go to 15 minutes because you're on 1 hour now. Go to 15 minutes, you'll find the candle starts somewhere there. And then that becomes more reasonable. All right. So yeah, I saw the reaction and I was like, maybe we're still reacting to that neckline. I'll get out. And I wasn't wrong by getting out because I didn't trust the trade. But turns out I was wrong. And it blew out, pushed up, and it was a very good trade. So I missed it because I was thinking it wasn't going to do what I wanted it to do. Now, after that, you can then say, all right, my next trade, I suspect could be there. All right. So you're trading based off the neckline. So your trade should be around that area. That's what you suspect. Right? If it does come down. So at the moment, there's nothing. Right? Something is happening there. Right at your neckline. Let's see if it respects that. And if you lose, that's it. You can see that. That's a new day. You see? You probably have been taken out because that did not work out. And reason why it did not work out, you probably have your answer on the higher time frames. What's the direction? Where are you going, right? Now, watch this. So now, do you see that that 1 hour neckline did not work, but for some reason, the 4 hour one, this one worked. So you constantly keep check of your higher time frames to see. You can even see a nice W right there. You constantly check your 4 hour time frame to see what is the 4 hour time frame doing. Yes, you need the bias. Where are we going? Which direction are we going? And which necklines have the most probability that they are going to work? That's exactly how you'll be doing that, because price will react in each and every neckline that it gets to. It's definitely going to react when it gets there, but it doesn't mean that all the time it will give you a setup. So if you know the bias that this is going to be a buy or a sell, then you can take it based on the bias. So that is where I made a mistake on this one, and I got out with just little profit over there, and then it went up my way and I regretted it. Unfortunately, I didn't trade this other part of the sell, but could have been a good opportunity as well. Or if I had tried from there, having not checked the bias, I could have lost the trade. All right. So these things, you'll find them everywhere, guys, like entirely everywhere. You can trade based off those necklines, even on higher time frames. You can trade based off that on higher time frames and just say, okay, the market is coming back to that same area, so I expect to have my setup in that area. So you can trade based off that. Maybe say you are looking for a sell setup, you probably expect it to be in this zone right there. You probably expect, if you still want a setup, you expect it to come from there. All right. So meaning you already know the likelihood, that the area that probably might have your setup, you probably know it already. And then once you get it from there, then you can go down with it. That's the most interesting part about these necklines. You can see how NZD USD also reacted right there, right? Yeah, right there. You can see how it also reacted right there. All right, maybe let's do this one last time before we close. Right. So you've got the neckline up there, all right, with your nice box, but you don't know what's going to happen in future. You've finished to level 3, but you do not have a peak formation. So don't enter because the peak formation is not there. All right. Look at that. Already the market sells because there's no peak formation. Okay. And then you get something like that. Remember those clumsy W's that we were seeing off the other time frame, the other pairs, like the AUDUSDs. This one is so much better for me because the second leg is closer to the first leg. So this one is pretty better. Maybe I can expect this to work out. We'll see about that. Or better yet, at least have them clear out the liquidity on the second leg. So I still want them to come down, but we'll see how they react when they get down. Right. You could have taken the buy there based on that. There's nothing wrong because that's what you can see, right? Could have taken the buy there. Now let's see if this buy is going to pay or not. new day. Another thing I would explain with this is that every time when a pair shows you an ID50 and does not move that ID50 on the same day, it's a little bit dangerous and you need to be careful. Every time, maybe let me illustrate it and say,
we should turn to Kangosu.
yes,
Run away.
yes, you've got your first leg, second leg, you go up like that and you form the ID50 and then you wait for the second day. Just get out of that pair because there is a very good chance they might even do that because you don't know. It's no longer an ID50. An ID50, we want it to form in the same day and move away in the same day. All right.
I said the ID50, we look at it on a daily time frame.
It not on the daily time frame. You look at it on any time frame. Any time frame. All right. Those necklines that we are trading are ID50s. All right. Hold on. So your ID50, remember, is the first pullback to the 50 EMA. All right. I'm just trying to look for something more cleaner. Maybe we can say this is an ID50. Simple because the market pulled away and then pulled back to the 50 EMA. So that first pullback is an ID50. So it doesn't matter whatever time frame you are working on. An ID50 is the first pullback to the 50 EMA. Does that make sense?
Yes, sir.
Now, some neckline trades can also be ID50s. Like you can have the 50 EMA in that same area. So then it becomes a what? An ID50. All right. Now look at this one. This one is playing games, and that's why I said if it goes to the second day, you're probably not safe staying in there. But it has meshed that low, so which is not bad. Maybe you are still holding. You want to see what's going to happen. All right. And then you are in profit, which is good. And then that happens. Now, this is not a break. This is not a break right there. The market did not break the neckline, that neckline right there. It is not a break. It's just a wick that took out liquidity up there and then came back into the range. Otherwise, if it stays like this, we might end up calling it a consolidation, but it did move on the new day, right? Now, that's what you call a break because you've closed above. And if in the next candles as well, they're showing that. So now, where do you expect your trade? If a trade is going to come, you expect it around that area. But you're already in the trade with the earlier ones right there. But just in case you missed it, you probably are looking into trading right there. Look at that. Maybe you have a buy limit, and in the morning, they get you triggered on. They pick up your position in the morning. They come back for you again, and they pick up your position again. Look at how easy that is. They pick up your position again, and off you go. You're in good profit now. So that's how easy it is, all right? And now you're in that neckline area that you drew the last time. So now you're waiting to see what's going to happen in that area. Or maybe you have closed or whatever, right? So there is nothing that proves that the market is about to sell. Nothing at all that proves it here.
Coach, please, I want to ask a question. anytime you see, can you go down to the P formation below? We want to ask this question, and I need your honest opinion. What of when we see this thing, if let's say this is our W that we saw perfectly well, that the price went up, so we are expecting the market to come here. Can we talk about that? Then, if probably this is our W now, this is the second opinion, this is the second, this one is the first, this is the first one I first of all asked. If let's say this second one is our W that we want to follow to see entry here. Now, what is your own stop loss if you pick it here at this middle here? Let's say you pick it there. Where is your stop loss? Is it this or below here? Where is the perfect stop loss that you are looking at, sir?
All right.
This is, and so then number 2 question, sir, is can we be thinking of look at this thing, it came here, it dropped, it went back. Can we be thinking, does this thing want to form peak return to go down? So you can answer the question.
All right, that's a very good questions. All right, that's a very good questions. Now, let me remove these boxes. Right now, if we use this line, right? Oh no, maybe let me use that. Hopefully, you guys are gonna see it. So my first W is this one, or maybe let's reset the whole thing and start all over again. All right. So here we are. We are looking forward to a buy. And we said we will take this as a W, right? We'll take this as a W. But all we are interested in is the neckline trade. So as it is right now, the W is still not fully formed because we haven't broken the neckline, right? Now the W is pretty much clear. If you caught it, if you caught the W, maybe say at the second leg, your stop loss should be below the first leg. For now, for me, I would put it very far away for starters and have the market go with me into profit. Now, as the market goes with me into profit, I'll adjust it to the place where I exactly want it to be. That's how I do it. I put my stop loss far away and have my position get into profit. Maybe say I'm targeting $20 take profit, and then my position goes into $2. All right. So I can then adjust my stop loss based on that and move it further in to the place where I want it to be, because now I'm sure that there's a possibility we are on the rise, right? Now, however, if I want to catch this neckline instead, all right, how I do it is, yes, you can expect the top part of the neckline to be your entry. The reason is because sometimes they miss these entries. Sometimes they just come and touch there, and then you get left out. I would suggest find a price that is 50% of that neckline candle going up. So from 50% of that candle going up, those should be the areas where to expect your position, right? So in this case, we use this one as a like the top part, which is more like 0%, the start of that candle. So let's go. So we come down and then boom, we're in the trade. All right, we are in the trade, and when I entered the trade, my stop loss still remains below the low, right? For now, until I see the move. Then it happens
Okay.
the
Okay.
following
Now,
day, because the previous day it did not move. So I leave my stop loss there where it is, right below. Now, wait for the market to get into profit, right? We're still not yet in profit, so I'll leave my stop loss there because there's a chance he might come for it, all right? Because he's looking for stop losses there. And then all of a sudden, I see something like that. Now that proves to me that yes, the trade is started to move. Then I can move my stop loss to the desired area. You can move it maybe to the low, or you can move it a little lower than those lows, but I would prefer the low, all right, for now. So that if anything happens, that is where I'll take it out. However, sometimes my stop losses are based off the money that I want to lose. So if the money I want to lose is $20, I will set it at that $20. But maybe say I got in with a little higher what do you call this, lot size, and I'm thinking my $20 is just closer to that low, I will gladly put it at minus.
please, can you just mention a lot size around that $20 with due respect, please?
Sorry?
I said, with all due respect, can you mention a lot size with that $20? With the
So
lot size
what I mean is that I have $100 account, right? Or maybe let's say I have a $1,000 account, right?
Good one. Okay.
Yes, I want to enter 0.15, right? From that 1,000. Sorry?
That's $1,000, right?
Yes, that's $1,000 account, and I want to enter 0.15 lot size, right? So I'm in the trade with 0.15. If I say I'm happy to lose $50 as my stop loss, right? If I say that, you'll find that if you come here and push it to $50, maybe your $50 will be somewhere there, right? Which
yes,
it doesn't make
sense.
Yeah, that doesn't make sense because it means the stop loss would have been taken out. So when I open the trade or when I place the trade, I put my stop loss at probably say minus $150 until my position gets into profit. Then I will adjust it until I will get to that 50. So I will be slowly adjusting it as we move until I get to the 50. Then I'll say, okay, now you are at $50 profit. I'll leave you there. Or until I even get to break even. That is how I do it. I don't go straight and say, okay, my stop loss is right there, because I can clearly see I'm not helping myself there. It's going to get hit, whether I like it or not. But I'm convinced that this is going to be a sell. Maybe let's say I put it at minus 150. But remember, I said I want to lose $50. And I put it at minus 150. And then the trade, for some reason, it is not a buy, but it is a sell. And then it comes down to my $50, right? I will close the trade at $50. Or, let's be realistic, maybe I didn't see it at that $50 and I will come back and I find it's at 70 instead. What do? I close the trade at that $70, but my stop loss is still there. I manually close the trade at $70 because I can tell that what I was expecting is not what's happening. So that is how I usually treat it. I sometimes manually close them.
If it didn't get to that, if eventually the trade didn't get to your stop loss, that is not physical to cash, and it now continue going up, then you now enter again and still maintain that.
Yes, exactly.
That is what I want to get. Thank you.
Yes, because I used to put my stop losses around these areas, and they used to get hit all the time. Like get hit and then it goes my way. Get hit, it goes my way. That's when I was like, no, I'm not doing that again. My stop loss should be far away where the pair can't even get there. Realistically speaking, it won't even get there unless that is the direction of the market. And then I just wait. If we get in profit, I adjust towards where my desired location. But if I see a continuation of the trade going down, then that's when I say, okay, my stop loss is at 150. I was expecting to lose 50. Okay, what is the likelihood amount that I'm willing to lose at this point in time? Okay, maybe if we get to $75, I'm out manually. All right. Because now I can see that, yeah, this is a sell. And for real, it's not looking promising. Or maybe if it's looking promising, then I will target 75. If I can tell that, nah, this is definitely not coming back, it's not looking promising, then I can close it straight away when it is at $50 or when it gets there, manually closing it. So there are so many ways you can navigate this. There are so many ways you can do it. All you have to do is, I would advise, lose money, not pips. Pips are nothing to you, but money is. Because if your stop loss is based off money, it makes so much perfect sense. You can then trade knowing that, yeah, if I lose, say, oh, what is going on? If I lose, say, $50, this is how much I am risking on the trade. But don't have your thing based off pips, because pips are just pips, guys. They will not help you. If you say 20 pips, 30 pips, it is still a stop loss, but to me, it's not realistic because you're losing money. So use a stop loss based off money, all right? Now, this is where my stop loss would be at the particular moment, right? Then we move. All right, I promise you, this is going to be the last example, right? Then we move up. Remember, the market came back to your profit, but because of that, I would have moved my stop loss to there. Remember that? And then I'm still expecting us to go up. And then we go up. Now, remember, I said for those who missed it, that's their opportunity there. And your opportunity gets triggered during the start of the day. All right. And my stop loss at this point is probably sitting in that low there. But for the sake of this, I'll put it here because it will act as if stop loss was hit. But my stop loss will be on the low there. All right. Or even on break even, whichever. I love to put them on break even when I'm going to sleep in case anything happens at night, then it hits my break even. Right. But that is what I'm expecting. You're expecting that trade. So let's say you missed this one. Your new trade is this one. And what Madam Jokemo was asking, that which one do I choose? I would choose the one which is lower, which is this one, because I don't want to be in a loss too much. So I'll take the lower one, right? And then where do I put my stop loss? Initially at the low, because I know I do not expect them to get there, right? And then my target is way up there, okay? Or not even there. Maybe I'll target the highs on the left-hand side. But we move. There we go. We come back. For those who didn't get triggered, now you have. Let me move it here. All right. Yep. Now we are triggered. Now, after having moved a little bit like that, adjust my stop loss. Or even better yet, put it in break even. All right. Or anyway, here, anyway, around there. But where you want to lose your money. All right.
Okay. Yeah, okay.
Then I
So
move.
what of now that place looking at a possibility of reset around that region?
Yes. Now. The possibility of a reset, right? Oh, sorry. How did I forget that? The possibility of a reset. All right. So up. So maybe you analyzed on higher time frames and you're not sure, but you're expecting a reset. Let's find out. Triggered. And then you're like, maybe that could be a reset. Now, if that is a reset, I'll put my first line there and say, this is my first leg. All right. But I'm not coming out of the trade. Okay. Now look at that. So if we are supposed to reset, I should see a reaction of price. Then I will come out on the first leg. Does it make sense?
Yes.
I'll come out on the first leg because that's where I've marked my first leg. So I'll come out there if we are going to reset. But at the moment, I have a trade that I'm holding, which is a neckline trade, and it has nothing to do with the reset. But I suspect that could be my first leg. Right? And then I see that. So after seeing that, if you want, you can even move your stop loss. Oh, I'm not moving the correct thing. Anyway, I don't think it will pass through here, but you could move your stop loss around that area there.
Okay.
Right? Yeah, somewhere around there and say, yep, if you take me out, that's good. I'll take that money and leave. All right. All right. I'm still waiting. And boom, nothing happens. I then adjust my stop loss back in entry. Does that make sense?
Yes.
Because I was expecting a reset, but the M did not form. If they had taken me out, I was going to gladly go out. That's it. But they missed me, which makes it even so much better for me to continue holding. But remember, my stop loss was sitting there, waiting for any eventuality, whether they hit me or they continue. If anything were to happen, then I would be ready for it. Now, you want a reversal on the neckline, that area, there's nothing at the moment, but probably you have hit your TP and you're out. All right. There's nothing at the moment, not even an M for a reversal that we can see.
So meaning that, coach, if I even miss any opportunity, I can mark here as if the market should come here while rising up, I can look for a re-entry there.
Yeah.
I mean here.
Yeah. You can look for a re-entry there. That's your area where you're suspecting there might be a re-entry. Now, up top there, I can't see anything that looks like an M. All right. I cannot, but that I suspect this could be a first leg. I suspect at the moment. Right. So this means I wasn't going to take this trade. Why? Because this, to me, does not look like a first leg. I cannot assume that it is a first leg. Do you see how you sometimes force trades? Look at that.
Yes. Somebody will be tempted.
Yeah, there is no first leg here because what you see here, How is it different from what you see here? It's not even different. Not even different from what you see there.
Not
So how
different.
do you know that, oh yeah, this is my first leg M, this is my second leg M? You can only know after it has formed. So before it has formed, you can never know. Like right now, you are then seeing that, oh yeah, that looks like an M. That is after. But before, when it was in real time, it was not easy to see. Hence, you couldn't have taken that trade. But after it has formed, that's when you can like go like, oh, okay, so that was my M formation. So those are the things that you deal with. And maybe if you are really hungry for a trade, then you can take this trade. All right, then you can take this trade. But again, it depends with what you are suspecting, or maybe you are taking it blindly based off the neckline on the left-hand side. Maybe that's the reason why you're taking it. So there can be many reasons, but looking for an M, it's hard for you to say that's my first leg. It doesn't even show it. It would have been good if it had gone further up and then come back a little bit deeper and then go for a second leg. That would have been the ideal kind of M. We are not saying those M's should be perfect. No, not really that. But at least if you can have something like this, that would be good. Look at this one, this kind of M, all right? We are about to finish, so bear with me, okay? Look at this. I'm trying to show you guys things that you need to look out for. Look at this kind of M, all right? So you get that, okay? Can you say you've got an M there? No, right? You can't say that is an M. That is definitely not an M. Definitely not an M. Now, looking at this, you can then say, maybe that looks like an M now because the market has moved away. That's why you are then suspecting that maybe that looks like an M. But it's still not clear to me, and it's in the same day. It's still not clear to me, which is why I said my expectation is I want to see a second leg come in that area. Now, someone might ask a question and say, why am I expecting an M to come around this area and not on the first leg? The reason, because I'm trying to be realistic that if I'm looking for a sell, at least what I am suspecting to be a second leg, I would love for us to come there. Then I can say, oh yeah, that's a proper second leg because we've got a deeper neckline. Why am I not saying there? The reason why I'm not saying there is simple because I do not want to wait for too long, because if I expect it there, what if they do not take out that liquidity and just go down? Because I want to try and catch a trade here. That is why I'm expecting the most realistic point, which is the second high in that area. So that's why I am putting my position somewhere there, just on the high. Put my position there, my TP there, and then say I expect my second leg to be around there. All right. There. All right. So if they go to the first leg, that's fair enough. Okay. My stop loss, far away. If they don't come and they continue going down, fair enough as well. It is what it is. All right. Next day. Okay. There we go. Triggered. There we go. You see where we got triggered? If you had put your entry here, you are not going to be triggered because you're expecting them to take out the liquidity above. It's not all the time that is going to happen, all right? But I'm being realistic and putting it on the second high there where I suspect that could be my second leg. But because this is ugly, I want to see them get to that point. And look, that's exactly where they reacted. So you need to back test these things. I know not everyone can afford a paid trading view, but you need to back test these things, pull out that MT4, MT5, and just look at the chart and say, this is what I see. I suspect this is what could have happened there. And then just pull your chart forward and you see whether you were right or wrong. You need to back test as much as you can. It will help you. Now, that being said, this is my future trade, my neckline. That's my future trade. All right. And we go down. We go down. Boom. That's my future trade right there. Triggered. All right. Now let's see how far this takes us. See that?
I think I need to say a big thank you to Coach for this now, because this thing, honestly, without deceiving myself, I would have picked this to be a very good M here. I would have picked this one to be M.
Yeah.
I would have picked it to be M. So, and it's one of the things that also still affect my games, despite the fact I'm still doing a little bit well, but this affect my game. And this is the question that I've always been asking, if you notice. So, but now tonight, I think I have a perfect clear explanation on how to determine a good hem. No matter how they are moving, we shouldn't be carried away.
Yes, don't get carried away.
Don't get so we should wait till it comes back to what we should do. What market should do what we want.
Yeah,
not
let it come to
doing what the
you.
market
Yes,
wants.
let it come to you. If it does not, then leave it. All right. Now look at the shocking part here, right? That second leg movement upwards. Do you see why it came out? The second leg, why it happened? There. That is why it happened.
There's a neck there.
Neckline there on your left-hand side. That is why the second leg came up. So at the back of your mind, you're like, yeah, we're probably going to react there. And then boom, it goes up and you're waiting up there, or you take the buy while wait for the sell. There's so many trades. Sometimes you can even buy this while someone is waiting for the sell and be like, what's going on here? That can't be. Yes, it can. It's possible. All right. Now look at this. The second trade that I talked about, that you probably got the peak, you got the second one. Look at this one here. All right. So all your necklines, neckline number 1, neckline number 2, neckline number 3. All right. So this is your neckline number 2. And look at how your price reacts there. Yeah, right there. Because of that neckline right there. So you can then come back and say, all right, I missed the entire thing, but I want to see the market come here in the near future. All right. I don't know whether that will happen or not. No one knows, but that's what you expect. Look at that. Easy money, guys. Easy money. Easy money. Now, what's my next trade? Right there. We're already there. These are expectations of necklines, right? What will happen?
And also, we should not be carried away with levels, so that we're not going to be expecting neckline.
Yeah, agreed. Yeah, agreed. I'm just showing you how the market goes in a pattern, but don't get too carried away. All right, you should count your levels, because if you don't, you might find yourself in trouble. Okay. You might find yourself in trouble. But look at that. All those necklines taking your way down. Does this one get affected? The last one? Probably not, because the market is maybe on level 3 now, and it has moved far away, like something like this, the market has moved far away, would you still be wanting a setup in this area? Maybe not, because the market has moved far away. So you disregard this, all right? The market is too far away to come back there. But in the near future, you never know. Maybe, just maybe, when the market gets there, it might react. All right? Right there. It might react. But that reaction, it doesn't mean you can take it as a setup. If you want to, that's entirely up to you, but it doesn't mean you can take it as a setup. So that is what happens, guys. Easy money, you know. Just look at the necklines. The market moves in steps. That's what it does. It moves in steps. Get there, put it in your box there, and say, sell, 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 sell. There you go. We can do this all day, guys. We can do it all day.
Thank you so much.
That is what you need to look out for. I think we'll do this more often, every lesson, you know, just to try and see what could have happened. Yeah, so we can do this more often. On the next lesson, we'll start by volatilities, for the sake of those who are trading volatilities on the next lesson, and then redo. Unfortunately, I can't use trading view on volatilities because of my location again. Terrible, but we'll look at it and see what setups we could have taken or what setups we will take and before we do currencies. So
I think the Reef has their own trading view.
Yeah, they have their own trading view, but I can't access it unless I have a VPN.
Okay.
So yeah, I've seen it before, but I can't access it, and it's a little bit different.
This is the gift I will give to your coach. I will give you this gift. You go and give it to your madam. Okay?